We're confident that long-term we can design and manufacture a compelling $25,000 electric vehicle. So, this has always been our dream from the beginning of the company. I even wrote a blog piece about it because our first car was an expensive sports car, and then it was slightly less expensive sedan, and then finally sort of a mass market premium, but like the Model 3 and Model Y. But it was always our goal to try to make an affordable electric car, and I think probably, like I said, about 3 years from now, we're confident we can make a very compelling $25,000 electric vehicle that's also fully autonomous.
Welcome back, everyone. This is James Ross here, and we're going to talk some Tesla. This was huge. I'm really excited to make this video. This was exactly what I predicted after the release of the Model Y and the Model 3. Another affordable car as part of the Elon Musk Masterplan, and this is the car that's going to put Tesla well and truly on the map. So some specs that need to be discussed here is the timeline is roughly in 3 years that this will come out, but I believe Elon is sandbagging the timeline because with each innovation and disruption that they add and the future battery developments and the scaling of the battery plants, this will reduce the timeline once again. So he was mainly saying this, as I spoke in the last video, in regards to the Osborne effect, where supply and demand, the demand gets dropped if innovation is coming out too soon. He's just sandbagging the timelines to keep that Model Y demand up right now. In terms of the specs, I'm quoting Musk right now. He cancelled the standard range version of the Model Y, stating that under 250 miles EPA range was too low. And subsequently, that 300 miles EPA range was now the normal. So we can base our assumption that this $25,000 robo-taxi car, essentially, which is what it's going to be built for, is going to be at minimum 300 miles. Now, with frugal testing, you could probably get it higher than 300 miles. The likelihood of it being 0 to 60 in roughly 6 seconds, which is really good for such an affordable EV. The other thing to talk about is, despite the discussion of a $25,000 robo-taxi car, this could be made in many variants. This could be made as a subcompact car, a sedan, a hatchback. There could be many variants of this $25,000 car. It doesn't specifically just have to be a subcompact. They could push out 4 different lines of the car, further increasing demand. And another interesting point from a scholar is whenever there's a reduction of roughly 10% in cost, the demand for a product is asymmetric. So essentially what that means is by dropping the price of something, say by 10%, you are disproportionately increasing the demand because a lot more people can now afford it. Releasing a $25,000 car as opposed to the $40,000 Model 3s, I wouldn't be surprised if it increased 500%, 5-fold, 10-fold. It's no surprise because that makes it affordable to pretty much everyone, and that's a competitor to the ICE cars. So you need to think of it that way. I wouldn't be surprised if the demand for this car completely exceeds the Model 3, the Model Y, the Model S, and the Model X combined. That's something that you need to remember. In addition to that, he said that this would be accompanied with autonomous driving. Now, a lot of analysts have dictated that he should have released more details on the ride-hailing network, but the facts are, for a ride-hailing network similar to Uber and Lyft, you need a lot of density. I mean, I don't want to be going on to Uber, calling for a car, and it comes 2 hours later. To put it simply, right now the networks of Uber and Lyft have a lot more car density, and if your experience using an application sucks, you're never going to use it again. If I used Uber 3 or 4 times and I had to wait an hour, half an hour, 2 hours, I would just stop using it. Tesla doesn't want to give its users a bad experience. The aim for this compact car is to deliver scale, to deliver density, which they don't have yet. So people saying that they should have released a ride-hailing network, it's stupid because they would just suck it. There's not enough Tesla vehicles. Maybe in California, certainly not where I live, certainly not here. So that's the aim. They want to produce in scale first before releasing this idea, and it just makes sense. In addition to that, once the mass scaling has occurred and there's a lot of density in the vehicles, if they wanted to go along the lines of contracting, they could offer insurance for the cars as part of a package. After so much given miles, they would be able to get a discount. In addition to that, when we're talking about ride-hailing networks, they're extremely competitive in the sense that in the past, Uber has pretty much manipulated the price of each car share to the point where other competitors' profit margins were squashed. It's a highly competitive field, and it's extremely underrated how difficult it actually is. So this mass scaling is essential for them to be successful. If it gets to the point where they have full autonomy, huge scaling, they're gonna crush Uber and Lyft. So there's also the distinct possibility that they could acquire them. I don't think Elon would ever do that, for the simple reason that Uber and Lyft are losing huge amounts of money, and it's based around them being a bit ridiculous with their finances. If you actually look into their balance sheets, their expenses are all over the place. If they were more frugal, they could definitely become profitable. But why acquire a business that's just a complete disaster? I mean, sure, they have that large-scale network, but they're not going to be able to compete with a Tesla just purely based on the fuel efficiency. So profit margins would be squashed, and they could then license the ride-hailing network to the likes of Uber and Lyft to use their Teslas. And that would be the more desirable approach. They can again receive a fee from Uber and Lyft because they know if they don't accept these terms, they're going to go bankrupt. They can't compete with the numbers. It's almost 5 times cheaper to actually use one of Tesla's vehicles than to use a regular ICE vehicle. As it stands right now, Uber is valued at $62.5 billion US, whereas Lyft is $10 billion. You can make the assumption that the market that they're capturing is roughly in the $70 to $80 billion range. So if we actually comprise that into the long-term stock valuation, you can see a jump in each one of your shares right now of roughly 27%. So long as you hold long-term, 27% easily will be taken. And I think that if they were to go about doing it, they should focus predominantly on a city-to-city basis, where they command and conquer each city and then move on to the other. Because if it's too sparsely populated, the Tesla vehicles, like I says, the app's just going to suck and it's just not going to be good for the user. Focusing city to city, similar to what Facebook did back in the day, focusing on campus to campus and then dominating that area, is what's going to allow them to then move on to another city. So that's just giving you some more room for thought there. But this is really, really exciting stuff. This is exactly what I wanted to hear. And I'd be buying the stock right now if I was you, because this is awesome. Thank you very much for listening. Click on notifications so you can see my videos popping up whenever I do. And yeah, have a nice day. See you later.